Hello my fellow freedom builders and welcome back to the channel. It is earnings season and therefore I am going to have a look at a couple of stocks that are reporting today. One of them is Microsoft. Later today I will do another video about Alphabet, the Google corporation. But let's start out with Microsoft. As you can see here in the earnings calendar and daily FX, we have Microsoft down here after close. And what we can see here is that the previous earnings was $2.32 per share. Now we are forecasting a bit less and a small rise in the revenue. Now this is a pre-earnings video, so we have no idea what is going to happen with the stocks today here. Not at all. So let's have a look at if Microsoft is actually fairly priced now and what might happen if there is either a positive or a negative earnings surprise. Now, as you can see, it is trading in the area just around the 40 in price earnings, so we are looking at that. Also, another thing is the PEG ratio. That is the estimated price earnings in the future divided by the estimated growth, and 5.7 in PEG ratio is actually not that good. I normally want to see it down around 2 and preferably below 2. 2.5 maybe, but 5.7 indicates that we are paying a bit too much for future earnings. But let's have a look at it. Value is low, but then again, this is historical data we use here. Earnings quality is great. Let's have a look at the earnings quality. That is definitely outstanding. No doubt about it. We can also see bankruptcy risk is basically 0. Analyst estimates are in strong buy. And yeah, the company, the Petrosky F score is 5. So that is kind of average. So let's try and put some numbers into our valuation chart here, because we can see that this is roughly 2.5 years out here. So what we can see here is that they are estimating some growth in year 1 and year 2, and looking over at Market Screener, we can also see that there are some analysts further out in time also indicating some growth. So let's just try and put 10% in here. That is not too bad. Let's also bump the price earning up to 40, where it is just around now. If the earnings estimates can hold through and they have a 10%, let's even say a 15% earnings per share growth in the third year here, just to be a bit generous, then we will see, if price earnings stays at 40, we will see a growth in the stock price at 34.2%. That is a decent growth, no doubt about it. Remember that with a 5% risk-free bond rate or whatever, you can get an almost 16% growth in your money in the same time, and if bonds are going up, you can even make some on that as well. So it's just to say that this is not completely stellar, outstanding in any way, but this is if the estimates hold through. Now, with the high interest rates, as I have mentioned in many videos, I don't really believe that, for instance, a company like Microsoft will go a lot above 40 in price earning. A price earning at 40 equals a yield on your money around 2.5%. That could come out in form of dividends. It could be reinvested. They can buy back the shares and all sort of stuff. But let's try and play around with the numbers and say, okay, what if earnings actually come out tonight and are a bit bleaker than this? What if they say we actually only think we will grow by 5% here in we have, of course, the estimates here. We can remove them, but let's just let them stay here, and let's bump the last of the estimates down here to 5%. And let's say that investors might say, well, they might not get nervous, but they might say, okay, there are better ways to place our money, because we can get a 5% on a bond. Right now we're getting 2.5% here. And since we don't have some stellar growth, we are actually, we want some more yield. We want we'll only pay 35 in price earning. Then over the next roughly 2.5 years here, we will only see a growth in the Microsoft share price at 7.2. What if investors will only pay 30 in price earning? well, then you will have a drop. I'm not saying that a drop will happen. I'm just saying that it doesn't take much in this environment for investors to say, nah, we want a bit of a lower price earning. We don't only want to settle for 2.5% yield. We want 3.5% in yield on our money, just measured on the price earning. And we are not too certain about the future growth based on the guidance that we will hear tonight. I have no idea, of course, where that ends. So what I'm saying here is that Microsoft is a good company. They are making money. They are return on investment and margins are great. However, their earnings have not gone up too much lately, but the price have gone up from 230 to, yeah, well, it's almost doubled. Not entirely, but close to. And that is simply too much. Right now, Microsoft, in my humble opinion, is not extremely well priced. I would definitely think, because I did mention it back in the middle of 2023 when it was in a 280 range. And at that point, I said, Microsoft is actually at a very good price right now. And as you can see, we have gone up from the 280-ish and up to 410. So, well, that's almost a 50% increase. So that is why I am looking to buy shares that are in a good uptrend, because I didn't buy at the bottom here. I only went in when the downtrend here had been broken and we were bouncing off some moving averages. So I was getting in the 280, 290 area, and I said, well, right now I think we have a good trend, and it is priced very well. And it is making a lot of money and a lot of free cash flow. And after that, the price skyrocketed. So right now, let me show you on a graph here. Here we have Microsoft, and you can see we have a weekly and we have a daily chart here. The reason why there are a couple of lines is that I have a credit spread option position on here. And I put it on down here, meaning that I have made the money basically I can make on this. So I'm planning on taking it off today because we have earnings. It will take a massive drop in the stock for me to lose on my position. The stock could drop 10 or 15% and I would still make my money on the credit spread. That's a wonderful thing about options. However, since I have made what I can basically on that credit spread, then I'll take it off today before earnings. But what I did down here was I said, well, it is a bit of a better value since then the price went up, almost 10%. So that is what you can also do in these positions. Right now, however, I would be more inclined, if it starts to drop, to maybe put a credit spread position up here, betting that it would not continue upwards. But again, nobody knows. This is just talking about how it is priced in our value chart. So, short conclusion, Microsoft is not very good value right now. Doesn't mean that it isn't a great company, just that if I were to buy right now, I would probably look for another candidate. If you are owning Microsoft right now, well, you can just say, I bought it at a good price, I'm making money, so that is great. I'm just staying in maybe. I think I would, but I would probably not go out buy it today. That's all for now. Take care of yourself and your money out there. And later today, there will be an Alphabet video as well. And tomorrow, I will probably make a short summary video of the two earnings from Microsoft and Alphabet, just to tie them up to this video. That's all for now. Bye.